Hey folks, it's Josh with another edition of What Just Happened, looking back at last week in the markets. And last week the markets were a little jittery with tariffs and jobs data and then the Federal Reserve coming into focus. But let's take a look at what actually happened and how it might impact you. Markets started off strong later in the week, though, as fears over new tariffs crept back in. The August 1st deadline has traders nervous, especially for countries without trade deals. President Trump apparently looks serious this time in enforcing the new tariffs, and this time we may not see a bluff. We've got trade deals with key partners like the United Kingdom, European Union, Japan, and South Korea. Other big partners like Canada and Mexico are still in the hot seat. And despite all the tariff drama, though, our second quarter GDP grew by 3%, and that's bouncing back from the dip in GDP we saw in Q1. That earlier decline does look like more of a fluke, with companies trying to beat the tariff deadlines, but we'll see as we go forward. Again, Fed Chair Jerome Powell sits in the hot seat. He's been under pressure. Trump continues to call him out. But he's kind of stuck because if he lowered rates, he was going to look political, and if he didn't lower rates, he was going to face the wrath of Trump. But good news, bad news, depending on how you look at it. Jobs numbers came in weak again, and markets are now betting big that come September we are going to see a rate cut from the Federal Reserve. Earnings are decent, but stock valuations are looking pricey. The S&P 500's PE ratio is higher than both its 5 and 10-year averages. So between the tariffs and the slowing job growth, there's a lot flying around out there. But as always, staying steady with your retirement plan is still your best move. I look forward to talking to you next week.